Hi, welcome to the market alert for Thursday, the 17th of February 2022. So UK inflation rose yesterday to a near 30-year high according to the data that was released. It came out at 5.4 was previous and forecast. And if you have a look at the graph, we can see that there is certainly an upward tick in inflation, but we know how much these numbers are manipulated, or not so much manipulated, let's say, cherry-picked, I think is probably more the word. The other news for yesterday was Powell FOMC minutes show Fed to rush rate hikes, leaves QT details up in the air, reminiscent of 2018. As I've said before, when the Fed decided to go with QT, failed miserably. But this time I think they're painted into a corner, to be honest with you, with the fact that we've got hyperinflation in the background. We didn't have that in 2018. We'll just have to wait and see. So it says in the subhead that current economic and financial conditions would likely warrant a faster pace of balance sheet runoff than previously seen. But that seems to contradict leaving the QT up in the air. But again, only time will tell. We haven't got long to wait now. It's going to be a month, isn't it? 16th of March, 16th of Feb yesterday. So it won't be long before we find out what is likely to happen. Let's have a look at the market's reaction for yesterday. Starting off with the Dow, this trading up to the 50% retracement and that 200 MA that I mentioned yesterday. Interestingly enough, the Dow isn't as volatile over the last few days as it has been during the last few weeks, whereas the DAX, which we'll look at in a moment, still seems to have a lot more volatility. That said, prices struggling yesterday at that 200 MA and the 50% retracements, and also going back or heading towards below the low of the 5-bar moving average. So from this low to here, this gives you a set of fibs to the downside where you can expect to see some sort of support there if prices move lower. So if you trade the Dow, keep an eye on these numbers. In the 30-minute for yesterday, we can see that the market rallying after the Fed spoke. Again, the omission of the QT details allowing for a late session rally there, moving up sharply. But you can see the market's pull back and is below the DP for yesterday in the 30-minute and below all of the averages at the moment as well. So some downside pressure in the 30-minute, but saying that, we have got a bit of a sideways move going on there at the moment. So let's just show you that, put it in blue, it's a bit easier to see. So yeah, let's also just draw in some fibs to the downside there as well. I see what's going to be interesting here is if the 89 will hold, if prices continue in the pre-market session to hold at this level. If not, then we go and test yesterday's low, which you can see over here where the buying came in late in the evening, and then the Fed announcement there, the FOMC minutes. In the German DAX for yesterday, as we look at the daily charts, also trading up to the 89% retracement, the 50-bar moving average, and failing to break this area. As I said to you before, the 89 is a true fib number. Market back through the 20-bar moving average and the 5-bar at the moment as well. So on the downside, I will be looking to draw in some fibs here. We're just at 38 at the moment, and there's a selection all the way back down. And interestingly enough, if we just drag this 89 across, you'll see that we have two 89s more or less converging here. If the market sells off to this sort of level, and then of course we've got this major one at 839, wasn't it? Yeah, the 4918. And the last live trade example I did on Monday, we were looking at this area as a support where the market came up to 89%. From there back up, and it's stopped and reversed. So keep an eye on these levels. In the 30-minute chart for yesterday, we moved up initially and then down, and then a bit of a spike with the Fed. The market traded sideways and then has moved lower ever since, again below the DP, below yesterday's close, and also below yesterday's low as well. Sideways at the moment, finding some support as we can see here, so you might get a bit of a bounce to get back through the low of yesterday, because that's consistent with the way these markets work as well. So in the 5-minute chart, a bit more detail, we can see that we're oversold in the futures session. We had demand, we've got the crossover in stochastics, we've got yesterday, the previous day's close, and we've got the BRN, and then we've got this cluster of volume as prices move up, and then it runs into selling, which you can see there with the red bar, and we close back below this BRN, this big round number, and the market then drifts all the way back to 89% from there, back to there, and the 200 MA. You can see here we've got this cluster of volume, we've also got divergence, and the market rebounds to the 20 bar moving average. It's not just the 20 bar moving average either, it's from this high to this low takes you to the golden ratio there of 62%, before the market then starts to move lower again. But also note in here, if I just spread this out a bit so I can show you a bit more clearly, inside of here again you will see that we have another retracement, and that will be 89% retracement. There you go, 78, 89. We go back to red and we get a continuation down again to the close where we had the kickoff for the day. And here you can see demand, we're oversold, crossover in stochastics, and then we start to switch to green in the parabolic, and the market moves back up to the previous day's high where it then struggles. And then we get the market trading sideways. We've got an 89% there, back at the high, market fails, and also in here you get this back retracement at the 50 bar moving average. Notice how this held the market back down, double bottom, and the market then trying to rally back above the previous day's close. And of course here and here they were trying to hold over to the left, where we managed to kick off for the day, and then eventually it breaks with the Dow futures coming on stream. Down to here, we go to this double bottom, and then the market makes its way back again, oversold, divergence, etc. The same repeatable pattern all the time, no matter what the market, there's your crossover as well. So back, and then market just waiting for the FOMC meeting minutes, which came out at the usual 7 p.m. there, and the DAX rallying back up in the evening with the Dow. So let's have a look at the currencies. They're in here somewhere, and we'll start off with the pound USD. Very quiet at the moment, isn't it? It's stuck in a bit of a range there that you can see, trading up to 78% and down to 89%, so it's got a defined range. Needs to blow out through here, but that will require the dollar to move lower, which we'll look at in just a minute. But yesterday, fairly quiet, but overnight we've had a bit of a shakeout, and we also had this in the DAX as well on the overnight market. 4 a.m, I don't know what it is, I don't know what the news is, but the currencies and the DAX move lower. The Dow didn't as much again, so it must be related to the European situation with Russia, Ukraine. Maybe did NATO announce something? I don't know, but there was a bit of a move, and it's more to be seen in the in the GBP JPY, which you can see there, big drop down. Then they buy back in, you've got the demand coming in there, and they brought the market back immediately. So unless it was just one of these quiet times overnight where they could shake out the market, I don't know, but both the pound and the JPY, they're sideways, lower, and then coming back to trade sideways. And in the daily chart of the JPY, you can see the market coming back 50% before trading back towards the 5-bar moving average and moving higher. Bit of weakness in the momentum in this market at the moment, as is in the USD as well. Not making any overbought or oversold at the moment, because like I say, it's trading in a bit of a sideways range, consolidating there. And finally, let's have a quick look at all of the metals, starting off with silver managing to move back up yesterday. They moved the market down at 1 p.m. as they do every day. It goes without saying. And for those who don't think it's manipulated, just do a search on the internet for JP Morgan 900 million fine for manipulating silver prices, along with all of the other banks as well. Deutsche Bank fine 48 million. It's all there. You just need to go and look for it. So again, yesterday, if we look at the 30 minutes, they moved the market down 1 o'clock fix as usual to the close. We went into oversold territory. We've got the pickup in volume there as well. And then all of a sudden, the market spiked back to the upside as they released. It was actually released before then, the US core retail sales. They came out higher than forecast as well. 3.3% if I recall. Let's just have a quick look. Yeah, there you go, 3.3%. And then also retail sales coming out way above what was expected. So again, inflationary. So eventually we got a bit of a kick up to the upside with silver there as the dollar moved lower. At the moment we're sitting on the DP sideways, as you can see there. And in gold, this is actually moving higher in the daily. We need to take out the 89% retracement and the recent high. Good news for the gold market, but silver not moving anywhere near as it should, because the gold-silver ratio moving back up to towards that resistance that we've got across the top here, and also the 80 psychological figure there as well. In the dollar, this also attempting to move higher at the moment. It was down yesterday, but holding at the moment. It needs to continue moving down here for me. It's certainly going to at some point, but at the moment it's being held, obviously, with the potential war issue that we have in the background, flight to safety for the US dollar. Crude oil yesterday, again, because of the news with Russia-Ukraine, is sold off a bit again, sideways though, for crude oil at the moment. And that's about it. So a lot going on again. Let's just have a quick look at today's news before we finish. Let's see what we've got. Anything major? Nope, nothing at all. Apart from we've got the G20 meeting and then Bullard speaking and Mester as well. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.